Most investors know that if they build a portfolio of index tracking funds and invest for the long term, they will retire rich. Using historical returns as a gauge, we can expect to make around 8% per year from such a strategy. Not bad.
But despite this, millions of investors, including us to a certain extent, cannot help but try and beat the market, which usually leads to higher risk and inferior returns. Picking individual stocks is notoriously difficult and is often time consuming if done properly. Is there a way of making market-beating returns without the effort of scrolling through endless accounts and continually monitoring the news and stock performance?
In this video, we're going to build an experimental investment portfolio of 20 stocks by taking a few shortcuts. The goal is to automate stock picking as much as possible, build a complete portfolio in less than 10 minutes, and remove emotion from our decision making. Let's check it out. Welcome to Unshackled.com, the investment and finance channel and website that says you and your finance is free.
That was Andy and I'm Ben, and if you like what we say, hit the like button and click subscribe.
This portfolio will be built in a Trading 212 Pie using analysis tools found on Stockopedia, specifically looking at super stocks. Stockopedia is a premium analysis, data and stock screening tool that allows subscribers to narrow down an investing universe of tens of thousands of stocks to a handful that are worth checking out.
Stockopedia doesn't come cheap though, and if you become a subscriber, you'll understand why. It's awesome. If you head over to the Money Unshackled offers page, you'll find a free 2-week trial so you can have a play, and 25% off the first year should you choose to stick with it. You must use this link to get the offer.
What stocks to buy? Here are the 20 stocks that we're buying for this experimental portfolio. All of these have been identified as the best super stocks that satisfy our rules-based selection method. Most of you will probably have never heard of these stocks, but don't let that put you off. We haven't set out to build a portfolio of famous brands. We've set out to build a market-beating portfolio with almost zero effort. Later in the video, we'll look at some of these stocks to get a quick overview of what we're actually buying.
A stock rank, and whether it's a super stock or not, can and does change on a daily basis, so we will be regularly updating this portfolio throughout the experiment. We'll be looking to refresh the portfolio every few months or so, and depending on how popular this video is, so give it the thumbs up if you want to see more.
We've also shared the pie within Trading 212, so you can check that out on the app, and we'll put a link to it down in the video description below. As we'll be updating the pie on occasion, you may want to save it or even copy it if you want to join in with the fun. While we were at it, we went ahead and created a pie for the Money Unshackled Ultimate ETF portfolio, which we talked about in this video. These ETFs make up the core of both of our actual ETF portfolios. We'll link to that below as well.
What is a super stock? Every company on Stockopedia, which is now over 63,000 stocks, is analysed for its quality, value, growth and momentum across hundreds of fundamental and technical metrics.
They all come together in a set of scores, which Stockopedia calls stock ranks. Subscribers to Stockopedia will see these in the top right of every stock page, and they are a fantastic way for investors to get an immediate view of a stock. Straight away, we can see here for Facebook that its quality and momentum scores are phenomenal, but investors will have to pay for it as its value score is in the bottom half of stocks.
The higher these stock ranks are, the higher the probability of success is. Although Facebook looks good, it is not a super stock, so doesn't make the cut in this portfolio. A super stock is where a stock is ranked highly across all 3 ranks.
Portfolio rules. We have decided to keep rules to an absolute minimum because we want to test the true effectiveness of super stocks rather than apply lots of subjective conditions. We're going with UK and US stocks only because we need to actually be able to buy them, and stocks listed in the UK and the US will be the most widely available to us. There's no point building a hypothetical portfolio that nobody can actually buy.
The next rule we're applying is a minimum market cap of £50 million. We're going with this number because the bigger the company, the more likely it is that the stock will be available on free trading apps like Trading 212, Freetrade and Stake.
Even with a market cap of £50 million, many of the stocks were not available in the Trading 212 Pie, meaning we had to omit that stock and move on to the next super stock in the list.
We have decided to limit any one sector to a maximum of 3 stocks. We're limiting it to 3 because we want to ensure the portfolio is well diversified. Without doing this, there is a good chance that the stocks will congregate around a few sectors, and failing to diversify is a rookie mistake.
The last and final rule is that the stock must be available in the Trading 212 Pie so we could share it with you guys, but as we discovered, this severely limited us in what stocks we could buy.
We applied all these rules and then sorted the list from highest stock rank to lowest, and then a secondary sort on market cap. We'll be buying 20 stocks, allocating 5% to each.
Must use the commission-free app. We're going to chop and change this portfolio frequently, so it will soon get very expensive if you have to pay for each and every trade. It's a catch-22 situation. Only the traditional platforms have all the stocks, but their high trading fees means we have no choice but to make do with the commission-free apps instead.
We actually had to cycle through 120 stocks until we were able to build a portfolio of 20 stocks based on our predefined rules. We had two stumbling blocks. The first issue was due to our own rule of limiting each sector to a maximum of 3 stocks. Then the second major issue was a lack of availability on the Trading 212 Pie.
Quick look inside. We're not applying any subjective analysis on these stocks for this experiment, but for curiosity, let's take a quick look at a handful of the stocks that made the cut.
Mohawk Industries. The stock is US listed and is valued at the equivalent of £7.5 billion. Stockopedia are currently giving it a stock rank of 99. They are a flooring manufacturing company who provide carpets, rugs, tiles, wood and other flooring products.
Having no prior knowledge of this company and only looking at the stock report, it's difficult to see why this company is ranked so highly. It doesn't look bad by any means, but equally it doesn't set the world alight. Stockopedia's algorithm must be looking at much more data points than we are.
It's quite cheap, with an EV to EBITDA of just 10.48, and its business doesn't seem to have been too badly impacted by COVID, with revenue down slightly. If it wasn't for this experiment, we would disregard this stock, possibly to our disadvantage, but rules are rules, so it gets its place in the portfolio.
Kingfisher. A company and industry that we know a little about already. Kingfisher is a home improvement company and is listed in the UK and owns B&Q, Screwfix and some other brands that we're not familiar with.
Its revenue hasn't really gone anywhere in the last 5 years, but it has received a little boost from COVID due to people being stuck at home and doing more DIY. The company looks to have strengthened its balance sheet with a huge increase in cash and therefore a reduction in net debt. This looks to be a steady investment that won't break the bank, as the shares are relatively cheap with an EV to EBITDA of just 7.45.
Cinex. I'm frequently drawn to tech stocks because they always seem to have the potential for supercharged growth, so a company like this in the portfolio is exciting. The biggest challenge with tech stocks is understanding what they do. This is the business profile and you can pause the video if you wish to read it.
All we see is gibberish, but the company is doing something right as their revenue has been surging over the last 5 years, but a sudden slowdown in 2020 and 2021 is perhaps due to COVID. We're not going to spend any time finding out exactly why this is, but it does seem odd. A lot of tech stocks have had super years, with businesses rushing out to use the services of tech specialists. Nevertheless, the company has continued to improve earnings per share and is forecast to continue doing so.
Surprisingly, the stock is dirt cheap with an EV to EBITDA of just 4.59 and a PE ratio of just 5.7. This is very unusual for a tech stock to trade at such a cheap valuation. Stockopedia put in the technology sector average PE ratio at 27, so Cinex could be a hidden gem.
CVS Health. We can't look at all the stocks, so let's wrap it up with CVS Health. This is the biggest stock in the portfolio, with an equivalent market cap of £68 billion. We really like the look of this stock with its first impression. The company is a US-based pharmacy business with almost 10,000 retail locations.
Healthcare is one of those essential products that is needed no matter the state of the economy, and it would seem based on their revenue and earnings that COVID has significantly boosted their P&L. Price-wise, CVS looks cheap. The PE ratio is just 9.5 and its EV to EBITDA is 8.25. The one bad fundamental that stands out is its debt. Those gearing ratios are sky high and its net debt is 4 times operating profits. That would normally be a red flag.
Enhancements. Obviously, what we've done today is very basic. You might want to take this idea and add in some additional rules. Perhaps you want to automatically exclude stocks over a certain PE ratio or when debt exceeds X times the operating profit. Whatever you want, you can do this on Stockopedia, so check them out with our special offer below.
Question of the day, will you be joining in with this experiment and how well do you think the portfolio will do? Join the conversation in the comments below. Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money, and if you want to see more great content, please click the subscribe button below.
This is MoneyUnshackled.com. See you next time.